Ever wonder what happened to the American oil giants in Nigeria? Not long ago, companies like ExxonMobil and Chevron were kings of the Niger Delta, a region crucial to America's energy supply. But today, they're gone, vanished. This isn't a story of a single epic battle, but a slow, calculated retreat. A death by 1,000 cuts. So, what really happened? It all started with the unraveling of the Niger Delta itself. The region descended into a vortex of chaos that made business simply impossible. Militant groups like MEND turned kidnapping, pipeline bombing, and oil theft into a terrifyingly efficient business model. For American companies, this wasn't just a security headache. It was a full-blown insurgency that put their people and billion-dollar infrastructure at constant risk. Then there was the host community trap. U.S. companies, with their famous logos and deep pockets, became the go-to target for endless demands from local communities. These communities, feeling cheated out of the oil wealth beneath their feet, looked to the companies for the support the Nigerian government failed to provide. It was a no-win situation. The cost of security and community payouts became a huge, unpredictable tax on every single barrel of oil. Just as Nigeria was becoming a quagmire, a miracle was happening back home in the United States: the shale revolution. Suddenly, fracking technology unlocked enormous, and more importantly, domestic oil and gas reserves in places like Texas and North Dakota. The choice for these companies became crystal clear. A barrel of Nigerian oil was risky, remote, and chaotic. A barrel of Texas oil was stable, convenient, and right in their own backyard. The smart money didn't just walk, it sprinted from Nigeria back to the Permian Basin. Investing in the Delta no longer made any sense to their shareholders. As the American majors packed their bags, a new, more ruthless player stepped onto the scene: the commodity traders. Companies like Vitol and Glencore don't operate oil fields. They trade the oil itself. Their entire business model is built on managing risk, not avoiding it. The chaos of Nigeria was their natural habitat. They happily financed smaller local companies that bought the assets from the majors, taking oil as payment. They operated in the shadows, unbothered by the complexities that terrified the big public corporations. And, finally, the world itself changed. The rise of ESG investing, that's environmental, social, and governance, put immense pressure on giants like Exxon and Chevron. An operation in Nigeria, plagued by conflict and gas flaring, became a massive stain on their reputation and a nightmare for their public relations teams. Selling off these assets was a quick and easy way to greenwash their portfolios and signal to investors that they were serious about a cleaner future, even as they ramped up fossil fuel production elsewhere. So, the U.S. oil majors didn't really lose Nigeria. They strategically surrendered it. The risks became too high, the rewards at home became too great, and the reputational damage became too severe. They were outmaneuvered by nimble traders who thrived in chaos and outbid by national oil companies from countries like China and India, who cared as much about geopolitical influence as they did about profit. The story of their retreat is a masterclass in corporate realpolitik, proving that in the world of global capital, nothing is forever. When the risk outweighs the reward, even the biggest giants will cut their losses and head for safer shores. Thanks for watching. If you found this story as fascinating as I did, make sure to hit that like button and subscribe for more deep dives into the forces that shape our world. See you in the next one.